Welcome to the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. And by looking at this data precisely for the JPY, we will have the possibility to gain an insight on what the biggest players in the market are doing, which are essentially hedge funds. So the smart money in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that the market is currently testing a quite important structure level. In fact, this zone was acting as previous resistance here. The market then broke it to the upside. At that point, this previous resistance started acting as support here, again as support here, and support here. Now, as the market is testing this very strong historical structured support zone, there is definitely the possibility to see bullish price action to be created away from this area. So starting here on the monthly, everything seems pretty bullish. Dropping down on the weekly, what do we see? Now, from a weekly perspective, first of all, we can see how precisely the market was reacting to this zone. It was respected very precisely as resistance here, as support here, again as support here, with the market creating this green candle away from the zone. The only moment in which the market didn't really respect it was after this break. Here, it didn't respect it as resistance as the market managed to break back above the zone. However, at the moment, since the market has now broken back above the level, it once again respected it as support and is currently rejecting the area to the upside. We can also notice that since we have an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse. And if we do that, we can see how we had a perfect 0.618 Fibonacci retracement, retesting exactly the support, from which there is the possibility of bullish price action to be created away from this area. Going down on the daily time frame, what do we see? Well, from a daily perspective, first of all, we can see how we did have the creation of this W formation. From here, I made a full breakdown explaining all the reasons for which we could expect this potential rejection to the downside, which is exactly what the market did. From here, I made another breakdown explaining all the reasons for which we could expect a rejection to the upside, which again is what the market gave us. Then we had this impulse, and from here, I made another breakdown explaining all the reasons for which we could expect first a correction, and then more bullish continuation, which is in fact what the market has just provided to us. And by the way, I will link in description all this previous analysis so you can go and check it out for more free education. However, at the moment, what we can notice is that as the market is currently creating this move to the downside, it also has the possibility of creating an M pattern. Now, what we know is that after the creation of an M pattern, what we could expect is a potential rejection to the upside for the completion of the M pattern at the neckline, which is the previous support turned resistance. Now, before we continue deeper with this analysis, let's first go and see what we have when it comes to the JPY, especially when it comes to the commitment of traders of the JPY, so what the non-commercials and the biggest speculators in the market are doing. Now, if we check the data on the JPY, we can see how we went from having the high of minus 20k net positions all the way down to currently having minus 56k net positions. Now, this shows that in the long term, institutions are shifting to the bearish side of the JPY. Now, keep in mind that all currencies on the spot are traded against the USD. So if we are checking the data for the JPY, we are actually already checking JPY USD, which means that a weakening JPY USD means a strengthening USDJPY, because clearly with the JPY getting weaker, USDJPY is getting stronger. Now, this increases the probabilities that if we will have the creation of this M pattern, we could get the completion of the M pattern at the neckline and the creation of this rejection to the upside, because as we have seen, a weakening JPY makes USDJPY stronger. So if we will have the creation of a bullish pattern here on the daily, this increases the probabilities that the market might reject to the upside, completing this potential M pattern at the neckline. So if we will have the creation of this M pattern, how we could be approaching a potential rejection to the upside? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of our valid entries at that point, we could be looking for a potential rejection to the upside for the completion of this M pattern, at least at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll over here, you will see that at the moment there is a massive promotion in which you have both a huge upfront discount on the lifetime access price of the mentorship program from $497 all the way down to $97, plus as an option, since I have partnered with the forex broker Blueberry Markets, if you open an account with them after you join the mentorship program from your student dashboard, you can get a full refund credited back into your trading account. So if you scroll lower, you will see that at the moment there is still time to join before the offer expires and a price and everything else goes back to normal. So I really suggest that you take advantage and join directly from here to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. And I will see you in my next breakdown.